What we're seeing right now is effectively the 2016 election of the financial markets, a massive upset that nobody ever could have predicted or expected. And to understand what's going on, we have to go back a little bit of time to understand what's a GameStop. It's an old brick and mortar video game store. And as we know, brick and mortar hasn't been doing too well over the past few years, especially in a business that's gone largely digital. So it's no surprise that GameStop posted pretty large losses for 4 out of the last 5 years. Now, that's the sort of thing that gets noticed by investors, especially investors looking to short stock. Now, you got to understand how to simplify this anyway. Shorting stock is when an investor borrows stock from the company expecting that the stock is going to go down in value. They sell the stock, make a profit, and buy the stock later after its value's gone down. So then they have the stock that they can return and the profit that they made. But there's some inherent risk in doing that. What happens if the stock goes up instead? In that case, you still have to buy the stock back because you're obligated to return the stock you borrowed. But you could effectively post infinite losses as there's no upper limit on the stock. Now, people realize this, and investors on Reddit, on a forum called Wall Street Bets, took a notice. One who's a professional securities analyst who goes by the internet name Deep Effing Value, remember that, it's going to be relevant later, noticed that upwards of 140% of GameStop shares were in fact leveraged this way, meaning that people had borrowed more than actually existed. That meant that when it came time to pay it back, there would be effectively no upper value limit on what those stocks could reach. And what he did was to sink $50,000 into this purchase and then start convincing other people to do the same. Now, really, this started about a year ago when the GameStop shares were only about $3 a piece. But over time, especially as the repayment deadline got closer and closer, those shares started to go up, until it started attracting the attention of some very big people, including Wall Street billionaires and, of course, Elon Musk, who tweeted a meme about it the other day to his 43 million followers. Suddenly, everybody on Wall Street Bets started piling onto this stock, driving the value even higher, because if they're all piling on, there's even less supply for big capital holders like Melvin Capital that leverage GameStop to buy back, which means that the stock kept rising, and those financial obligations we mentioned before stayed the same. So what's the end result of this? Melvin Capital is out a lot of money, at least $5 billion, according to Wall Street investors, and possibly as high as $14.5 billion, based on the capital gains, the total market cap of GameStop itself. And what happened to the internet forum users? Well, we've seen people posting stock portfolios all over Wall Street Bets. Many of them made tens of thousands of dollars. And of course, the original user that started it all, Deep Effing Value, lived up to a rather prophetic username, posting an impressive stock portfolio of $47 million in GameStop stock at the moment.